Hello dear friends, you have come to the channel where amazing trades and other crazy things happen in the world of trading. My name is James and I'm a professional trader with more than 5 years of experience in trading. And in today's video I will talk about interesting, important and very informative things from the world of trading. Thanks to which you will able to understand the whole essence of the market and trading even deeper, so that you can always make your trades only in the plus. Also dear friends, I want to share a link to my private Telegram channel where I share very important insider information and just news in the world of trading. Well, let's get started. But before you start, don't forget to click like, subscribe to the channel, write any comment, absolutely any, yes, because this is how our channel is promoted on the YouTube platform, and it is you who can help us to advance in the system. So go ahead and hit that subscribe button with all your might and squeeze all sorts of bells, so power yourself your favorite soft drink from Business Flask, because we are starting our story. Dear friends, today our topic of conversation will be the history of stock exchange trading as we know it today. You ask me, why do we need to know this? I will answer you. It is very important to know the whole essence of the market, its history, because it is repeated from time to time. And knowing it, you will make only the right decisions and you will be able to save yourself a lot of money. As we know, the history of stock trading goes back many centuries and is linked to the development of financial markets, cultural changes, and technological advancements. Let's take a look at the major stages and events that have shaped the world of stock trading. And we will start with the ancient world. It would seem that how is the ancient world connected with modern stock trading? But it is precisely from the ancient world that sprouts of that we have today. When we talk about the ancient world and stock trading, it is important to realize that the concept of modern exchanges and stocks wasn't yet formed, but there were some preconditions and precursors of stock trading. In ancient civilizations, including ancient Rome and ancient Greece, there was trade in various goods and resources. However, buying and selling shares in companies or corporations as we understand it today wasn't as developed. Instead, there were other forms of investments and financing. In ancient Rome, for example, there were so-called publicani, private entrepreneurs who finance public projects such as building roads and aqueducts. They collected money from wealthy citizens in exchange for a share in future profits. This can be seen as a verbatim persecutor to the concept of shares. However, the process was loosely organized and lacked of a formal institutional framework. Another example is medieval Europe, where there were public trade fairs and guild fairs where goods and securities were traded by the bore little resemblance to modern stock exchanges. Securities could be bought and sold at these fairs, but they were mostly shares in companies or credit instruments, not shares in the modern sense of the world. And as we can see, people at all times needed trade tools for various affairs, from the peasant, albeit to a lesser extent to the highest ranks. And there is one conclusion to be drawn from this. The market has been around since the very beginnings of the society, and it linked to us, and it will be with us always. But it is even more interesting because in the 17th, 18th centuries, with the development of navigation and trading empires, there was a need to finance long-term projects. In 1602, the Dutch East India Company was founded, which issued the first shares and bonds, giving investors a share in future profits and losses. This is considered the first joint stock company, and the most important moment in the history of development is the emergence of the New York Stock Exchange, of course. In the late 18th century, American traders and investors began gathering under a pear tree on a Wall Street in New York City to trade stocks and bonds of new companies. In 1792, the Treaty of Five, which became the basis for the creation of the New York Stock Exchange, it was an important moment in the development of stock trading in the United States and around the world. But in the years that followed, due to the lack of regulation as we know it today, were many tragic incidents in the trading world. The crash of 1819, this collapse proved to be one of the first major financial crises in the United States. It was caused by falling real estate prices and the crisis of borrowers who couldn't repay their debts. As a result of their collapse, many banks were bankrupt and many companies were forced to close. The crash of 1837. This crash was caused by debt crisis in the United States and an outbreak of speculation in the stock markets. Many banks and stock exchanges closed and the economy fell into a long depression. Crash of 1857. The crash was related to the problems of railroad companies and banks in the United States. It caused many banks and businesses to bankrupt, and the government had to take measures to stabilize the situation. Panic of 1907. This crisis was caused by a lack of liquidity and panic in the stock market. It swept across the United States and brought many banks and companies to the brink of bankruptcy. Thanks to the efforts of banker J.P. Morgan and other financial leaders, the crisis was resolved, but it provided further impetus for the creation of the Federal Reserve System in 1913. These financial crashes and crises proved important in shaping financial regulation and legislation. They emphasized the need to control financial markets and protect investors from fraud and practices. Each of these crises led to the development of legislation and institutions aimed at preventing similar events in the future. As a result, numerous countries, including the United States, have created regulatory bodies such as the Securities and Exchange Commission and developed legislation to control and supervise exchange trading. These measures have helped improve the transparency and availability of financial markets and made them more accessible and safer for investors. And as we can see, even such adversity, our market survived and continued to blossom with more and more golden glow. And in conclusion, something you probably already know about the modern world, modern era. In the late 20th and early 21st centuries, exchanges became increasingly electronic and global. Important developments were the introduction of electronic trading, the creation of the internet brokers, and the development of high-frequency trading. The financial crisis of 2008 also had a major impact on global exchanges. This crisis, also known as the Great Recession, was one of the most serious and influential crises in the world economy since the beginning of the 20th century. This crisis had many causes and profound effects and affected financial markets, economies, and politics in many countries. And now exchanges are facing challenges in the form of cyber attacks, regulatory changes, and the impact of new technologies such as blockchain technology and cryptocurrencies. Nevertheless, exchanges remain important elements of the global economy and financial system. And what kind of history modern trading will have depends on you. Now you understand much more deeply the meaning of the existence of stock trading as well as our society as a whole. It is not known how many more much crises we will have to endure, but what is known is that one shouldn't give up in the face of difficulties, because any fall is always followed by a stunning growth. And at this point, dear friends, I have to end our video. I hope it was interesting and as always informative for you. Don't forget to like, subscribe, click the bell to get all the notifications of new videos as soon as they come online. And also don't forget about the Telegram channel for the real VIPs. That is for you, of course. In it, you will find a lot of information about trading, transaction, and good mood. Your friend and business comrade James has been with you. See you again in the next videos, guys, and bye.